15-minute block. And then we can see that larger hourly block, which on the hourly doesn't actually look very clear. But if we use the same principles on the 15-minute, we can see that we've broken the highs here. So we've created this 15-minute order block, which then price moves away from it quite impulsively, taps back into it, and then takes off very impulsively. So if you miss this one, you're just using this as confirmation and then using the retest entry to get involved in the order block. And again, if you were using an entry, you would want to factor in this wick to the bottom here, just for liquidity purposes. But again, 9 pips, 6 pips. If you're feeling risky, we'll call it, you could use the 6 pips and consider this just a probability that it could or couldn't happen, and take that 3 pips as a risk to reward kind of increaser. But that's totally up to you in that case. But I do recommend keeping in mind those type of liquidity wicks. If we move to the next trade, you can see again, I had mentioned that we were approaching a 1-hour order block, the larger one. What we can see is we break structure, create a 15-minute order block here. There's also one down here as well. And price comes up, it taps into the block, respects it, spikes the highs, and then taps into this block, and then starts to drop. And like I'd said when I was talking about this particular example, if I just pop up to the hourly chart one more time, we can see that we have the equal highs. If I just put that ray line back on, we have the equal highs with sell stops buy stops and selling stop losses. Basically a lot of liquidity up here. We can see quite simply the sweep of liquidity. Again, we have an order block here, we've broken structure here, and then price taps in. Instantly would have gotten tagged out on that trade, but it's not a big deal, it's going to happen. And what we can see now, if we just look, we called out this order block down here because we have a break of structure, even though we know that the order block from here is likely to occur. We can see that price respects the block, comes back up, and we can just see that, if we did manage to stay in this trade, say you used a much higher stop loss, just as an example, this would be a great spot to either look to take profits, secure your stop loss, or just take partial profits, because price is likely to react to these key points in the markets, the order blocks. So just something to keep in mind. But we'll focus on this. We had that sweep of the highs, which would have stopped us out on this order block. But what we can see is price then swept the high here, pushed to the downside, it broke structure, it even broke some more structure down here. So we can see price is very strongly bearish at this point, breaking structure, creating lower lows and lower highs. So we can see that if we were to just move this out of the way so we can get this in clearly, if we look at this candle as our order block, we can see just from a logical standpoint that this doesn't really make sense. If we were to put an entry on here, we would need about a 35 pip stop, even just to that order block. It's a 2-to-1, not the greatest looking trade, which is why the refinement really came into play. We can see the next candle is just, it didn't actually create any momentum, so we can move our order block to this candle. And what we can see is then a breakdown, high momentum, breaking structure, breaking more structure. And what we can see is price just taps into it and then continues to fall. Now, of course, I had mentioned earlier that you should factor your stop loss in with the wick. In this case, because it's such a large wick, you can trail it down a little bit or factor it in, but either way, you still have a much smaller stop loss than if you were just purely basing it on that larger candle. So at least the risk to reward has been increased, but again, because it's such a large wick in this case, you can likely get away with reducing the stop loss in that case. But what we can see is price taps the order block and then just continues to push to the downside. again, we can see this order block, we've broken structure impulsively. Price reacts to it initially, respects it, taps into this order block here, which we can see we have some structure here. We've broken that structure, and then we factor in the fact that we are now starting to respect the higher time frame order block. We're starting to create lower lows and lower highs. We can see that these highs are getting lower, so a little bit of extra confirmation for this block here as well. And what we can see is price then breaks to the downside, breaking structure once again. And then we can see this funny order block that we had talked about earlier on the 1 hour, where it's just large and totally out of place. But what we can see is, if I just get rid of that, we can see it on the 15 minutes, where we have a break in structure, impulsive move to the downside. We do get a tap in from right there, but we tap in again. Now, if you had your stop loss placed, there's a chance you could have gotten tagged out. If you factor in that week, you would have stayed in. But again, it's just part of the game, and you're just playing the confirmations in these trades. And what we can see is price just then heavily taps in. So you can see that this on a higher time frame is where institutions bought in. So we can see now, if we're looking, we've created a low here. We've finally broken this low, initially not impulsive, but started to get some momentum back here, and then continued to the downside. What we can see again is we had our tight hourly block that we identified here. So we had the break of structure here and break of structure here, high momentum moves. So this is correlating time frames as well. And what we can see on the 15-minute as well, we have our order block right here. And in this case, what you can clearly see is the 1 hour is actually much tighter than the 15-minute. And that is bound to happen from time to time. So this is where really your preference comes in. You know that the trend is heavily bearish, so taking an entry is valid. We've broken structure, multiple points of structure. We've had large momentum entering to the market. We know that we're likely to test into this area, and it comes down to stop loss placements. If we look at the hourly, we can get as tight as about 4.5 pips. And if we go to the 15 minutes, we just get tagged in there, and we can get about 9 pips. So a 5 pip difference, but again, risk to reward is still very good there. So it's totally up to you in that case. But what we can see is, again, we are approaching a larger order block. So we would more than likely want to be either targeting this area, or at least be willing to take partial profits or secure in stop losses once we start approaching that area, just to be certain that we've secured as much as we can on that particular trade. What we can see, we tap into the block, we get a little bit of respect of that block, going very deep. So the 1 hour entry would have been valid. You would have had a lot of pain, a lot of drawdown there, but it's not a big deal. But what we can see is price on the 15-minute, we break structure once more after tapping into this 1 hour and 15-minute order block. So we can see that we've created a 15-minute order block right here. And again, if we use this bearish candle, we can see the next candle, large wick, doesn't really show much decision. But if we move it to the next candle, we can see that we start to get the actual momentum. That's where we actually created the break of structure. And if we look on the hourly time frame, you can see we broke this structure here as well. We do get a push into the market, so we can see it on the hourly, the strong impulsive nature of that candle as well, which is why we could denote it as a 1 hour as well. And again, as we can see, we tap into the zone and move to the upside. Targets would likely be prior highs initially, just because we were looking at lower lows and lower highs forming. So of course this in its own regard right now is counter trend when we're looking at the 1 hour and 4 hour trend. So something to be mindful of. You don't want to always be swinging for the fences on every trade. You want to be logical in your approach. So whether you target the previous highs or again, like I said, you take partials or you tighten up your management. Totally up to you. You can see that we have a little bit of an order block that does get respected a little bit, so maybe you'd look to keep your stop loss under that point. Maybe take some partial profits up here, stop loss below this order block, and what we can see is price then does roll back over and creates a lower low. Again, following the same logic, we can see we break structure. We're starting to make higher highs in price, and we can see from a continuation standpoint, we have this order block that we could have taken a more risky side of things, because if we look on the hourly chart, the structure that we would more or less be breaking would be right here. So this is kind of more intermediary. We do have this high that we did break, which is valid to suggest that this order block is with the trend. So just depends on that. On the 15-minute, it is incredibly clear structure. You can see we break the low, so then our high is here. We break this low, high, break this low, then we create a series of higher highs. So there's a lot of confluence to suggest that a buy on that particular order block right there would make sense. And then we'll just use this as a final example. You see we have structural point here and here as well, and here and here. So we've broken these highs quite impulsively. And we can see from a 15-minute time frame, let's go to the hourly just really quick. We can see similar process where we've broken this high impulsively. We can use this bearish candle as our origin or order block. Then if we go to the 15 minutes, again, our order block would be this one here, and then we can just kind of move price because that candle didn't engulf. We look at this candle, does the next one engulf? Nope, still more indecision. Go here, we can go, okay, now we actually have some true momentum, but we do get a little bit of consolidation, just to point out, before we actually break to the upside, getting true momentum in the market. And what we can actually see too is if we just look at this one closely, we do have an order block here as well. This one may actually be cleaner looking because there is no liquidity tapping into it. But what we can see is now we're starting to get a little bit further away from the hourly and the original 15-minute point. And what we can see is we do tap into it. We create a wick into basically initial order block on the 15-minute as well as the hour, and then we go. So there's a possibility if you took the top one, you would be stopped out. So it's just something to keep in mind, and just something I wanted to point out, as I know there would likely be a question as to why we didn't use this one in this case. And again, it just comes down to you run into the issue where you start looking at candles and you go, okay, it's not that one, it's not this one, it's not this one, it's not this one, okay, it's not this one, now we get to this one, and you basically just started to move price, and we're correlating that with the hourly chart and the hourly momentum in this case. So that's why we would choose more this one, because it's in line with the hourly, whereas this one is above the hourly, and we know that we're likely going to tap into the hourly one, the hourly order block, and this is just resting just above it, so the likelihood of getting stopped out is fairly high when you factor that in. So just something to keep in mind. But that's the breakdown and examples of order blocks. But you can see their effectiveness when you combine them using the 1 hour and the 15-minute. You can trade them primarily on the 1 hour, or you can trade them on the 15-minute using the 1 hour as a reference point as well. Again, combining them with market structure and truly understanding higher highs, higher lows, lower highs, lower lows, what the higher time frame sentiment and bias is suggesting, and then finding order blocks that are trading within them, looking for, again, momentum and breaks of structure. You'll be able to frame up some very high probability and high risk to reward trade setups.